Good morning, Robbie. Welcome.
Morning.
Can you introduce yourself and what Jigsaw Agency does?
Yeah, I'm Robin Holt. I'm the MD of Jigsaw Agency, and we're effectively just a sort of a 360 plug-in marketing agency for capital raises. We purely just do the marketing and content work for companies when they go through a CSF or a wholesale raise, mainly CSF raises, which is equity crowdfunding. We just are the sort of one-stop shop that you need when you go to actually execute one of those raises.
Can you run us through some of those elements that you help out with in an equity crowdfunding raise?
Yeah, for sure. So the elements that we help out with are content, digital advertising, and sort of the strategy around the whole campaign, and the EDM services, which are very, very important to get the narrative for the campaign right, understand what happens at the very, very top of the funnel, all the way through the middle to the bottom. And it's a very data obsessed role, which I sit in.
I guess it'd be great if you could run me through what proportion of investors come from digital advertising, what proportion of investors maybe you nurture on the company's existing database that they have, and how many maybe come from the platform as well.
It's different for every single company, of course. So for earlier stage companies, which we sort of break down and we try and understand how engaged or how big an audience is within a business itself. So say, for instance, you've got a business which has got less than 1,000 people on its database. The founder doesn't have a huge personal network of individuals, and most people don't have a huge personal network of individuals who can just pile money into the company. But if they're really quite early stage as well in their revenue, so less than 250,000 per year, then we'll put a company into an early stage bucket. And in that early stage bucket, we typically see that sometimes up to 75% of your EOIs come from digital advertising. So therefore, we've then got to account, okay, what's the actual raise target itself? How are we going to be able to achieve that? And then what do we need to put into digital advertising in order to be able to get enough EOIs as possible to then be able to see those EOIs convert to investors, and a very, very stock standard conversion metric that has been used since the beginning of equity crowdfunding here in Australia has been a third, because you really, when you average out all the data, you see that a company who may get 1,000 EOIs might end up with 333 investors. And that's been really, really consistent across the board. So we always need to make sure that we can get to that figure, which will then allow us to understand, okay, based on the potential average amount, what we can get for our investor numbers to be able to then achieve that investment goal. And we've broken down a whole sort of mini algorithm to understand, okay, what bucket can we put people in depending on their audience size, their revenue, their personal network, and also industries, because some industries do much, much better than others, and some struggle a lot more. So it's really important to factor that in to then understand, okay, how much are we going to need to put into digital advertising in accordance with what the company needs to raise.
And it'd be great to, you mentioned EOIs, it'd be great to run through what the timeline looks like for a campaign and where the ad dollars are spent along the campaign timeline, because I know that it's better to spend more money at certain phases to promote investment. So it'd be great to kind of run us through that, and also the funnel that investors go through, the EOI to going live to investing. If you could explain that for our audience, that'd be great.
Yeah, a lot to break down. So look, the timeline for these campaigns is it's been tested many, many times over now. So you've got companies which will go through what's typically a 3-week long expression of interest campaign, and then a 2-week investment offer. And that's really quite deliberate, because when you're going through these campaigns, that 5-week period, it might seem quite long, but actually you can't waste any time in that 5-week period, because you need to maximize all the exposure that you can get, build up every potential investor up to the very launch of the investment offer, and then close out with an absolute bang and leave nothing on the table. So what's really important in that sense is to actually do all the work in the lead up to the campaign, so that you start day one with your expression of interest campaign with all the right content and all the right copy, and learn very, very quickly what works and what doesn't work. So on the content side, we work on producing many, many different variations of video content. So it might be a short version of a main pitch video. It might be 3 call to action videos that we go live with. Then there might be 3 more that are coming during the expression of interest campaign. And then we might go live with 15 to 20 static images to support those videos as well. And so at the very top of the funnel, what we're focusing on is going out with multiple different assets with copy that actually speaks to a very broad investor base. So some people who might be customers, some people who might just be interested investors, some people who might be completely brand new to the industry and the equity crowdfunding industry. So we need to speak to the lowest common denominator as well. We can't just speak to people who know the brand and understand the brand. But when we are speaking to people who know the brand and understand it, then we send them a warm-up email before the equity crowdfunding campaign goes live. So then those people actually feel like they're already sort of looking behind the curtain. They've been given an inside scoop into what the business is doing and what equity crowdfunding is all about. So there's a lot of information there that we give to them. As far as the top of the funnel, middle of funnel, and bottom of funnel is concerned, the top of the funnel is really all about getting as many EOIs in the door as possible. And some of that will come from an existing subscriber database from the company, of which many companies might build up a list of email subscribers, but they might not nurture them. And so there might be quite a lot of work to do to actually engage those individuals to help them to understand what the business is doing and why it's an attractive investment opportunity. But then from a digital advertising sense, like I said, we have to communicate to a very broad base of individuals, get them onto the landing page on OnMarket and have them express interest to invest. And then from there, we automatically send them an email to confirm their EOI and tell them that we're going to give them really engaging drip-fed pieces of information to help them to understand the business. So as soon as they've expressed interest to invest, it's all about nurturing. And then in the lead up to the investment offer, it's really about making the timeline of the campaign as obvious as possible, so that we build a little bit of FOMO in the lead up to the raise and sort of give people exclusive early access to invest early in the raise itself. And then towards the very end of the investment offer, it's really all about building FOMO into the sort of final week where it's 3, 2, 1 days, and then the final day left to invest. And that's when you're really nurturing people and everybody's being convinced by everybody else to invest because they can see the campaign is going really, really well. And there's a lot of reasons as to why other people will follow what the crowd is essentially doing to invest into a campaign.
One of the concerns that a lot of companies have is whether they're going to get enough investors. And you mentioned that up to 75% of all investors can come from digital advertising, which is completely new people to their business. And it's hard to quantify for a business that doesn't know, they don't know which bucket they fit into, whether that's early stage or whether that's someone with a little bit more traction. I guess when you do a diagnosis of a company that fits in a certain bucket and you give them an estimate of the amount of ads they're able to spend, how accurate can this number that you predict they're going to have in investment be?
We've actually worked it out off of historical campaigns in order to be able to then give ourselves as a prediction tool that, because it's been put together off of historical data, we can't get it to be accurate 100% of the time. We need to make sure that it's accurate about 80% of the time, so that even if we're a little bit off, we're not too far off. And that's what it's really all about. It's about trying to make sure that we can understand what's going to come in from an existing audience and an existing database. In some cases, we'll be working with a business where they may have 40,000 subscribers on their database, but actually those individuals haven't been nurtured very well. And actually, they're not people who signed up to sort of follow the business in general, but signed up for another reason. And so they might be completely disengaged. And so we might assess a business to be much later stage and might have a lot of revenue, but a lot of that revenue isn't tied to its direct customers. It might be a B2B play. So people don't really know about the business. So it can sometimes be quite tricky to assess and understand what the business needs to put in from a digital advertising perspective. But because the digital advertising piece is so easy to sort of quantify from a cost per EOI and a cost per investment, then the real tricky part is understanding the average investment parcel size. What we've seen, though, is that we need to make sure that we actually put the majority of our ad spend into the expression of interest campaign, because when we assess the data and look back on it, a quarter of EOIs convert into the campaign. So when I say a third of EOIs end up being investors, there's always a split of people who are EOI investors and people who are non-EOI investors. But if you look at the EOIs, they actually convert at a quarter on average. But when you look at the overall average amount that they invest, it's significantly bigger. And a lot of the time, for a bit more of an established company, that average amount that an EOI commits to and then invests into the campaign typically looks to be above $2,000. When we're getting new investors just from digital advertising alone, they actually tend to be closer to the $1,000 mark. So this is a really important factor. And about being accurate, it's really about going into the campaign on day one with the best data that we can, with the best understanding, to try and help to set a digital advertising target to be able to achieve a goal of, say, $500,000 or $750,000. But that changes throughout the campaign because we have to respond to whether the database has resonated with the campaign or not, whether we've got a potential lead investor who might be coming in, and maybe that changes the sort of makeup of the digital advertising structure. But we always can adjust and really sort of just reassess. And we do this week in, week out with the businesses that we're working with to really help them to understand what their overall outcome is going to look like because of what we're investing into digital advertising.
Yeah, it sounds like there's a lot of elements there. I guess a lot of businesses may use digital advertising for their business already, whether that's run internally by their internal marketing, whether they've got an agency that does their digital advertising as well. I mean, as a platform, we found that businesses that use their existing marketing or use a generalized marketing agency for their digital advertising with equity crowdfunding doesn't work. I guess if you could explain what makes Jigsaw Agency different to running it internally or running it with your existing agency, and why it's so important as well.
Look, I've been in the equity crowdfunding space now for coming up to 9 years, and I was working, in the space and working with individuals, well, not quite like myself in the sense that they were existing marketing agencies, and they would then come to the table to say, hey, I know how to do marketing, I know how to do digital advertising and EDM, but I don't know equity crowdfunding. And so then I'd sort of bring them up to speed with equity crowdfunding, but most of the time they would actually, take sometimes 2-3 weeks to get an understanding of what works and what doesn't work. And so it's very, very different. Like if you look at typical e-commerce businesses and how they set up their ads, they might set up their ads with a number of different assets with a cost per result goal, and then they may set up a different campaign to the side with those winning assets and copy. And that process can sometimes take a week or 2 weeks or 3 weeks. And so it's a very different structure depending on the business and depending on how they set their business up. We found that long form copy works significantly better than short form, upon which you assess most e-commerce businesses, and their short form, very direct copy works much, much better. But really it's about the content and the structure and the way in which you have to communicate with a lot of urgency and really make sure that the business is set up to do so. And so we actually have set up Jigsaw from day one to just work in this space and in this industry. So it's really about working with somebody who does this day in, day out, as opposed to working with somebody who is going to have to be learning along the way how to adapt their methods to make it work for an equity crowdfunding campaign. It's kind of like if you hire any professional services individual to work in a specific space, you don't want to be spending money on helping them to learn how it works before they actually get to work and start to apply what they're doing.
Thank you. That's covered off on the campaign really well. For someone that is thinking about doing equity crowdfunding, whether it's now or whether it's in the future, what some pieces of advice would you give to someone who's, say, doing equity crowdfunding in 6 months' time to prepare for this 5-week campaign?
Yeah, there's really no bad time to get started and start to work on building up and nurturing your audience, as well as also building up to a equity crowdfunding campaign, because like I've said, it's really a data play. This is a marketing campaign, much more so than a traditional capital raising exercise. So in order to execute really, really well, if you can go into day one of your campaign and already have some certainty on individuals who are investing, then you're already going to be well ahead of the curve. And so in order to do that, I would really strongly recommend that you can do some work in the lead up to getting your docs ready, having a sort of a small landing page ready, and actually capturing and engaging with some of those individuals. Luckily, it's something that we work on and we can help companies with. And we do this really to just try and make sure that when you go and do a capital raise, it's not just one big massive sprint that you get completely exhausted by and then get to the very end of and realize that was so intense. I don't want to do that again. And a lot of the time, what happens is that companies are exhausted by that because they've had to prepare their offer document. They've had to prepare other existing documentation. Maybe investors wanted a one-pager so they could see that. They've had to prepare all these emails and these different funnels to be talking to investors. And you want to spend a lot of time talking to investors, but you don't want to do it as one big mad rush. You want to be able to do it in a way where they can build and nurture a relationship with you, and you can do the same. And you're actually saying, hey, I'm considering doing a capital raise in the future, and I'd love to have you involved. Here are all the details about my business. And then you don't have the same time pressure. Sometimes the time pressure is good when an investor might think that they have a lot of time to invest into a business, and they can see that there's an actual cutoff date that they need to make a decision by. But that's so much better if they've heard of and learned about your business 3 months prior, as opposed to they've heard about it 2 weeks ago and they're all of a sudden being told, hey, this is your last chance to invest and it's closing tomorrow. So yeah, there really is no bad time to start and prepare working on an equity crowdfunding campaign.
Okay, great. Well, thank you, Robbie. That was really informative. And if someone wants to find you, where would they go?
They can either find me on LinkedIn, or they can just simply send me an email at robin@jigsawagency.com.au. But yeah, always try and make myself nice and available. And for anybody who's keen to have a chat about equity crowdfunding and just raising capital for their business, I really do love just sitting down with anybody and just trying to understand their business and what they're trying to achieve. And we'll happily steer them in the right direction if it's not for them. But if it is for them, then definitely work on preparing for a raise in the future.
Great. Thank you so much, Robbie.